Hello, everybody. Welcome back. It's Friday. Sorry I'm a few minutes late. I just finished up a live class for my double up alert. So just wrapped it up a few minutes late and jumping right into YouTube to wrap up the week for the final hour. Markets on the day. We are basically flat on the SPY. I would say, I say flat, but really it was a pretty directional day. It was kind of nuts. So we closed here yesterday and we are right here today. Interesting for this final hour. If we stay right there, I guess I wouldn't be super surprised, but all this means for today is we went up, we went down, and we balanced. So kind of a typical choppy, noisy day. Some key levels that I've talked about this week. I'll be pretty short and sweet revisiting this stuff. Next week is all eyes on the Fed. So the watch tool still shows the Fed cutting rates by another 25 basis points, 97.1% probability. It's probably going to happen. Okay. It's unlikely not to happen. But then the big question is what happens in January? January is looking to be a pause. Okay. Because if we cut in December, that's the same rate for January. So that's a pause. March is 52 to 37. Now, I wouldn't be surprised if this goes up and we're sitting at 50-50. Okay. Based on what we're seeing in the bond market, the Fed is probably putting itself into a corner to not really have the ability to cut. If bond yields are going higher, bond prices are going lower. We've got inflation going higher with 3 reads in a row. CPI is higher, PPI is higher. We won't know officially what PCE is until January, but if it also prints higher, all these things are showing that inflation is heading the wrong way. Okay? You idiots to the Fed. Like, for them to be sitting here cutting rates at all-time highs, why is it? Because they just said they would. So the problem with the Fed's transparency is now they essentially we kind of said we'll do it, so we're going to do it. And the real-time market indicators are showing that it's probably not the best decision. And that's unfortunate because, does something break as the Fed cuts again? Maybe. Does something break if they decide to cut in March? Maybe. Does something, linger in the first Q1, Q1 of next year? I don't know. I've made a case for both sides, right? There's a lot of elements that can keep this market going, right? I mean, you have a bull market that's been healthy since Q4 of 2022, all of 2023 in 2 massive runs, pretty much all of 2024 outside of an April hiccup and an August volatility event. It's been nonstop bulls. Now, yeah, it didn't make it easy to have those 2 little hiccups. August was a scary one, but by September, which is usually the September effect, which is negative for the markets, it was up, back up to all-time highs or very close to it by the end of the month. And October, right where we left off. November, right where we left off. One of the best Novembers ever in history. And then December, just barely drifting to these higher highs, but still making higher highs with very low volume. So there's not a lot of disruption right now. Price is not proving to go the other way. So price is still bullish right now. On top of that, if this market starts to think about what else could we do to drift higher? Earnings season in Q1 could still keep the markets going higher. We could still say that, hey, we're beating expectations. We're hitting expectations. They can set the bar really low where it still beats on earnings, earnings per share and revenue. It's like all sorts of things can happen where it's like they make these revisions as they come into earnings to have a green number to make the market get all excited, to just keep the market happy. Okay. Now, on top of that, if things look a little dicey, you've obviously had some companies this year that have done extremely well and some companies that have done mediocre or poorly. Mergers and acquisitions are also a big part of the markets. So those that have money can buy the competitors that don't. There's also stock buybacks. It's a little bit of a trick, okay? But stock buybacks where they remove, right? They remove shares from the market. They own it. That takes away more, out of shareholders' hands. But basically, it says, okay, there's less available for you. That means there's more scarcity. So what does it do? It drives up price. So there's a lot of ways to keep prices elevated and even going higher, even without one might say a reality of we're in a great bull market. I mean, look, we are in a good bull market, but the problem is we run into these bull markets where they tend to get into stages of euphoria. Okay. So the valuation levels are getting pretty darn high. The price to earnings, price to peak earnings, price to sales, price to peak sales are pretty high. Now, it's not the highest we've ever seen, but they're getting up there. On top of that, we are very close to a disinversion out of the 10-year 3-month yield. That's one thing I've been watching for months, and it's right there, like 12 basis points away. We're also watching the 10-year yield going higher. It's up like over 5% this week alone. It's up 80 basis points since the September rate cut, and the Fed's going to do it again and cut next week. So these are all things in the background. The inflation stuff, we've got 3 prints in a row showing the wrong trend. If I go to an inflation reading here, if I go core PCE, there's my PCE inflation. I showed this yesterday. We are trending higher. So we had a flat PCE through the summer, and then all of a sudden, August, we had a big jump in September, another jump in October, another jump in November. We're not going to see a print on PCE in December. Usually this is you can see here, it's like the 31st, the 27th. It's usually reserved for the end of the month. And I didn't see it on the calendar. And I'm pretty sure I can double check that here. But did anybody see core PCE? Because I think the next print is going to be in January. So if I go this month, let's go out towards the end of the month. We're almost there. 18th is next week. I don't think we have like PCE sprinkled into FOMC. All right, we're going into next week. So anything for the U.S. We have PMI numbers out of the U.S. on Monday the 16th. PMI numbers have been also inflationary. Anything out of the U.S. here, we have retail sales on Tuesday the 17th. We have the big old Fed on Wednesday the 18th. There is no core PCE that I see. Okay, we have BOJ right on top of that, piggybacking off the Fed on Thursday. It's Wednesday to Thursday night, or I guess Wednesday night to Thursday morning. We also have Bank of England with a rate decision. We have U.S. GDP. I still don't see PCE. Retail sales out of CAD. Oh, it is there. Okay, my bad. It is the 20th. So we do have core PCE. Oh, okay. So we have another. This is supposed to be the preferred measure of inflation by the Fed. And I love how they don't give us year over year, right? So let me check on the Bloomberg calendar. Bloomberg calendar for next week. If we go into Friday the 20th. Where's my filter? Let's go to the 20th. All right. So it should be at 8:30. Here we go. All right. So we have core PCE. There's no forecast right now, but we have core PCE month over month, core PCE year over year. This will be important to watch. Now, just like everyone else, I'm interested to see where's the forecast for next week. I hope they have a forecast, because if all these are forecasted to go higher, that would again cement that this is going the wrong direction. Okay. Core CPI, it is going the wrong direction. PPI, core PPI, it is going the wrong direction. They're all trending higher from September's bottom. Does it matter right now to the market? Apparently not. All right. Because the market's still sitting here at all-time highs, but it's going to matter when it comes to the Fed in 2025, when they have a clean slate and they can say, okay, if we're really being honest here, we had a good battle with inflation. We were winning that battle. Now we are going to start to see that, hey, we're either going to let inflation run hotter or we need to do something about it, i.e. stop cutting rates. Okay? Now the market may not like that at all. And I don't know when they're going to say that, if they'll say it explicitly, if it just kind of happens. But either way, if inflation gets back above 3%, we are no better off than where we were literally a year ago. And that's also running somewhere between 4 to 4.5% inflation since 2020. So it's not a good thing. So is that enough to break the market? I don't know, because the best way to battle inflation is to frickin' own assets. And if you own assets in the stock market, you're making money. And is it designed to help offset inflation? Sure. And maybe that's the Fed justification. Hey, just invest, right? The market's up 20%. Just invest. Our inflation's at 4%. Congratulations, you're making profit. Right. But then you pay taxes on it, and then you deal with a potential, 13 to 15% drawdown. Just saying. It's not the answer. It's like if we really want to get back to a 2% inflation target, the Fed should not be cutting rates in 2025. But they'll talk their way through it, and they'll be crazy shifty, and they'll be going, we'll talk this direction and this direction, and the market's going to be trying to figure out where to go. right? So that's the story this week. We do have PCE next week, so I didn't know that. That's good to see. I want to see what that Bloomberg forecast looks like going into Sunday, Monday of next week. Okay. Let's see here. So we're flat for, let me go to the weekly candle here. So the SPY for the week is a little tiny red candle, right? So slightly down for the week. The Qs, we actually made an all-time high this week. So we have a green candle with some extra body confirmation above. The daily candle today ended up pulling back. It faded a little bit. So there's my Qs. We hit all-time highs today. I closed out a waterfall income trade for profit. We faded off that. I'm actually curious. Let me see what this, does it close out on its own? I'll just look at it. It was a trade literally I took on Monday. So I don't feel that bad about taking a 1 cent different winner. But what's this trading for? Trading for the same amount, 20 cents. All right, I'm happy I closed it. I got in the trade for Monday. I'm out today. That's a 4-day hold. No big deal. Speaking of that, let me update that. 12.10, and then today's trade, 12.13. A 4-day hold. Yeah, totally good. All right. So that gives me one more SPY trade. I've got 2 SPY trades running live on my waterfall income. We have a few trades running on my double up alerts. We had a big masterclass just the last like 90 minutes, and we have, let's see here, 1, 2, 3, 4, 5, 6, 6 trades running. I think, right? 1, 2, 3, 4, 5. Yep, I've got 6 open trades on double ups. That is out to 12:20 and 12:27 expirations. And we'll have some fresh trades next week. I'm going to be watching the index ETFs very closely. SPY, Qs, DIA, IWM. Depends on the pricing. Depends on the flow. IWM probably. If I'm going to rank them in this order, I would say SPY, Qs, IWM. DIA is probably my least favorite because it's the lowest volatility. All right. So anyway, I'll be looking for some trades on that next week. Yeah, it doesn't matter how much they take in, Papa John. They're spending like idiots. So that's the problem. We've taken in like 63% more taxes over the last like decade, but we've spent like 90% more over the last decade. So we're still operating at a crazy deficit. We're still, printing money and adding, $1 trillion of debt now, like every 60 days. So kind of reckless. But yeah, even taking in more taxes, and it's not enough because we spend. So I mean, if everybody ran their household like the government, we'd be broke, and we'd be in all sorts of trouble. Because we're not a personal bank. We don't have a money printing press. We don't have free reign to do whatever we want as world reserve currency. So as a household, we'd be bankrupt. But unfortunately, the U.S. government's a pretty powerful thing, and so is the Fed. All right. So next week, it's going to be a big week. We'll see what happens with our flows. I'm looking at a couple of pretty key levels here. So I mentioned this in a session this whole week. I just talked about some key levels. If this resistance holds as support, there might be some volatility to either one, get us back to all-time highs, and the Fed puts this market in motion for another go higher. Okay. So if we go higher, then I think through Christmas, through New Year's, this market grinds out these tiny little gains, but it does end up going higher. If the Fed has a very noisy day, and again, this is the truth when it comes to forecasting. Next week is an up, down, sideways projection. I don't know what price is going to do. Neither do you. But I will say, based on key levels, the path of least resistance is going to let this thing march higher. If there's no major disruption and this market doesn't take anything sour, then we're probably just going to march higher. Now, will it be like crazy momentum and really aggressive bullishness? Probably not. But if it just stays here and then just goes up and then goes up, and then through Christmas and through New Year's, even though we have limited trading times, we get up to a little bit higher levels. Maybe this thing squeezes out another 5 or 10 points higher. So all-time highs, perhaps more to come. Okay, so if the Fed doesn't do any major disruptions, there we go. Okay, now, how about the interruption? Okay, the interruption would be the Fed just makes a very noisy day a very noisy week, and prices don't really do anything. We don't go to the highs, we don't go to the lows, we don't break any major structure, and we're stuck here with a ton of chop and nothing really happens. Okay, this type of treading water would make me think that next to nothing is happening over Christmas and New Year's. You know, I mean, it's obviously something can happen, but unlikely if like the Fed can't create a catalyst to get this market moving with price, whether it's up or down. I think the market's going to just be sideways, and this might be, we'll have to renew some order flows and renew some Vanna charms in January of 2025 to see how bullish is this market for the first part of the year. Are there more order flows? Is it a clean slate? Is it like we're going to be bullish because 2024 was so good? Maybe. But if it's sideways, I'm pretty hesitant going into 2025 is like, here we go again. I'd almost rather see a pullback. But the problem with the pullback is if the Fed gets it where they are really driving prices lower and we're threatening these levels, I think if the Qs are below 515 or the SPY is below 600 or the SPX is below 6018, okay, that does some potential damage to these levels, and we might see that this might have some recovery. So that great little, 32% rally on the Qs or the 28% rally or 27% rally on the SPY might start to give a few percent back. Okay. Now, one interesting stat by the end of the year, I don't know if gold is still up 25%, but that's I don't think that's ever happened in the history of the markets. If the SPY or the S&P 500 and gold close for 25% gains, that's never happened. So that'd be a pretty impressive milestone. A testament to a balanced portfolio. You're investing in equities, you're investing in gold, cool. If you're holding bonds, you're in a drawdown. But if you're holding Bitcoin, you're doing fine. So it's been a year where there's been some really good opportunities out there, and it doesn't all sit in one place. So I don't know. This year's been interesting. You can diversify and have a pretty good run. If you're trying to be a stock picker, that really wasn't the play. If you traded the indexes or traded your storage stocks like your Mag 7, your semiconductor spaces, that was really where all the gains were at. I know Nvidia has been a little choppy. It's pulled back about $15 or $20 since the highs, but Nvidia was responsible for a big chunk of the market's gains this year. All right, so Qs watching some key levels. So like I said, does the Fed put the market into orbit for more drifting to the upside? Even if it's low volume and low momentum and very small closes higher, it could still go higher. If the Fed creates a lot of interruption where it's just a big old choppy mess, if we don't break below here or we don't break that level, then it's just going to be sideways and we'll assess from there. But then we could just have like a nothing Santa rally. It could be over. Like the Santa rally could have already been priced in type thing. Okay. And then if it breaks below, then we'll see if we, hang on to these gains. But we don't know. So am I hedged? Yep. I'm hedged out to December 31st. Some of my stocks that I own, I'm hedged out to January and February pretty inexpensively. Like I bought a 9-cent put on Amazon today out to February. I mean, even if Amazon has a $10, $15, $20 drop in the next 2 to 3 weeks, that's enough to turn that 9-cent debit into maybe a 50, 60-cent credit. Cool. I'll lower my cost basis. But if not, I'll lose $90 on my position and I'm still up like $15,000 on Amazon. So it's the cost of doing business if I want to make sure I'm getting some protection. All right. Anyway, so that's Qs, that's SPY. IWM, we are getting some decent pullbacks. Let me switch this one back to the SPY. And here's IWM. So it's interesting how this one, right at the same high, I mean, that was a really nice trade this year. I'm not going to lie. I was long, I was building in here. I was kind of stacking in with some puts. I did some ratio spreads. I do have shares at $200 on the IWM, and they're still up. I have a call at 225. Okay. And I've rolled this a couple of times. So my 225 is kind of like getting it called away around 230. I've rolled this thing out a couple of times. So, I mean, the highs being around 240 and change, it'd be like getting it called away at 230. So I'm looking at about $30 per share profit, which is pretty good. But I needed to stay there by like March. If we stay above 225, great. I get some nice profit. But the reason I'm talking about this is, between the IWM, if this one pulls back on a daily time frame, I would be pretty interested in some buying opportunities. Okay. If we pull, and it's not like right now, like we've closed below the 21. Here's the 50. I mean, if it comes back to the 50 and then somehow finds a way to go higher, so be it. Right. The Fed's cutting rates. Is that good for small cap? It could be. But part of me is not like super stoked about trading 2,000 stocks. I'm more excited about 200 stocks. And that's why I have these other ETFs. So IWY is the top 200 in the small caps that are growth. And you can tell that there's virtually no pullback here. So what am I going to wait for? Well, either the IWM pulls back deep enough for me to get a level that I want, or IWY pulls back to an attractive level that I could justify getting in with some dynamic support. Okay. So this is one trade of many that I'm watching right now and looking for some capital to deploy, and probably doing it with defined risk. I don't know if I don't know. The tech market might. I think the tech market's going to be still a big contributor to gains next year. Probably has to be because it's been tech and margins and cash and little debt has been what's looking like high quality stocks. So I want like high quality small cap in addition to high quality large cap. And then IWX, which is the top 200 value, this one's been pulling back. So, IWM is pulling back, value is pulling back, growth is not doing anything other than pausing. That's what the NASDAQ has done this week. The NASDAQ made all-time highs. The VIX, we're pretty low. Does the Fed drive the VIX lower? Does the Fed drive the VIX higher? I don't know. If it's lower, I'm going to be looking for some type of long vol opportunity in Q1. SVXY, I did take some profit this week. I had a 55 and a 54 put. I did those trades when we were here. So as this was dropping and dropping, I did an in the money. It was a 55 and 54. Okay, so I got filled for like $4 to $5 credit, and we're trading above that for today's expiration. So I closed these out each for, I think one closed out for like 15 cents, and I collected $4 and change. Closed out the other one for like 8 cents. It was over $4 and change. So I didn't want to take the assignment and allocate the capital, so I closed out those puts. The other ones were down here. I have a $40 and a $35 put. I did that on the August bottom. So this is another instrument that I watch very closely when it comes to volatility events. Okay, if the stock market goes aggressively lower, so does the SVXY, but then I'd like to get long SVXY as it recovers. So essentially, this is like a safer way to play short vol. Okay, all right. Dollar index. Next week will be interesting. End of the week or end of the year, I don't really know what the dollar is going to do. I would just watch this range. Okay, it goes up, it goes down, it's range bound. That's fine. I'm not trading much on the Aussie dollar or the dollar right now. Outside of, I'm actually position trading on the dollar. I'm long Aussie dollar, long New Zealand dollar, long dollar CAD, long dollar Swiss. That's it. Oil. Okay, oil's up 1.81% today. This is the first time since November that we have taken out a previous high. So is that something that matters? I think so. If oil goes back to this 200 moving average, I mean, sure, it might do the same thing, right? It might pop up to the 200 moving average and then fade all the way back down to 67. And we would draw some structure like this, right? Or like this. But I think with this little run in oil, that is going to make inflation stuff going into January a little bit stickier, as it already is. Okay. Is it quick and consistent to convert a credit spread to a debit spread? No, it is not. You're better off converting it to a butterfly. If you wanted to, and again, no. I'm just going to say no. I mean, all right, so look at it. Number one, you're doing it the opposite sides, right? If you're bullish on something, I'll just give you a stock. So let's go SPY. So let's go to December 20th. Let's say I'm bullish on the SPY. So I buy the 604 and I sell the 605. That's a bull call spread. That's a debit spread. Okay. What are you going to convert that to? If you convert that to a credit spread, you're going to have to invert this that way, right? So you're gonna book a loss on the debit side and you're gonna flip it, but now you need price to go from a totally bullish direction into a total bearish direction, right? So I mean I wouldn't I wouldn't flip the trade as it's in. Like a bull call spread, you want to keep it that way. It's defined risk. Now you can modify it, but anybody that is rolling or modifying, you're going to book that loss and then flip the trade, and then this just creates a different line in the sand. It's also a totally different trade. And in real time, I don't know how this gets affected, because let's say for a second, let's say that I took this trade right now for 53 cents. Okay, and this is not correct. I'm actually, let me flip this around. So if I do a debit spread first, so I buy the 605, sell the 606, that's a bull call spread. Now, if I see price going up, well, this bull call spread is going to be showing more credit, which is good, because if this is trading for 60 cents credit, trading for 65 cents credit, that's showing profit. But if it flips and goes the other way, what do I have to do? Well, my long call is going to be showing a loss. My sell call is fine, but what I'd have to do is essentially invert this trade. So you'd have to roll the 606 down to 604, try to get a credit for that. It's just going to be a mess. You're going to end up booking a loss on your debit spread, and then hoping that your credit spread stays at the point where, now I'd flip it to 604, and now price has to continue to go down. And I really don't know what that end result is. Like, you might book a loss on the debit side, you then flip it around. If it's a noisy week, it's like you're just taking 2 losses potentially. So I just think you're trying to over optimize it. I think you just take a trade and accept the risk and take the trade. Stop overthinking it. The only trade that I've taken in the past that I think I can convert to something that's a winning trade would be this. If I could do this on the SPY or the SPX, but if we're trading at 604, if I buy the 600 call and I sell the 609, okay, so right now I am 433 away from my buy level, right? If I go 608, now I'm roughly equidistant. Now I'm still paying a little premium for it, but I have built-in time premium. So if price just stays where it is, I can maintain this value to the tune of $4.45. That's what my trade is worth right now, guaranteed. If it stays where it is, I am getting $4.45, which means I can close this out for a very small loss if price went nowhere. If price goes up, I get paid on that. If price goes down, it's a small risk. So what I've done in the past is, if I take this trade right here and all of a sudden this is going the wrong direction, I can then flip this thing and just add in an equidistant sell. So if I'm 8 out this way, I can go 8 lower and sell this, okay? And I can convert that to fudge, man. I meant to get rid of my yellow lines. So if I buy the 600 and I sell the 608, okay, that's a debit spread. If I then flip this around to sell the 592 there, okay, I can then turn this into a butterfly, right? So I would have to buy another leg here and then sell and then sell. And there's a chance that, because if I take it right now, if I buy the 600, I'm still going this direction. Okay, if I'm in the middle and I sell a 592 and I sell a 608, that's a strangle. Okay, so this is going to tie up all the buying power in a strangle. So in order to not take up all the buying power, I would have to add in a second 600. Okay, so again, you look at those numbers, it's pretty interesting. I would spend $4.60 to buy this thing, right? And if I flipped it, I could get, maybe, if I'm lucky, I mean, price would be going down, so maybe I could get like $2 of credit. And if I get $2 of credit, that lowers my risk now down to $2.60, and I also have a butterfly spread that gives me a profit trap. And if price stays somewhere between 600 and 598 or 600 and 602, I can still walk away with some profit. Also, that's going to be in my profit trap by expiration. That's the only trade that I feel like within a week or two I can make an adjustment on and not worry about it. But no, I've never flipped a debit spread into a credit spread or vice versa. Okay. All right, Nathan, it just sounds like you made me go on a tangent with the question you didn't even want me to answer. So For your service, dude. I mean, watch the master classes. You're talking about waterfall income. Watch the master classes. I spent 3 or 4 classes talking about take a debit spread, take a debit spread, take a debit spread. Even the last 2 weeks in classes, if you want to take a debit spread, you can. The reason why I didn't take a debit spread is because if price were to go against me, I wanted the shares. But you can always take a debit spread. Yeah, you can always take a debit spread. You don't ever, especially in your situation when you're telling me all of these contracts you're trading, you don't ever have to take a credit spread. Just flip it. But I'm tracking my live trades. And so the last 3-4 weeks, I've only taken credit spreads. Yep. So Daniel's asking, will I teach at waterfall? Teach what? I teach the waterfall is like it's credit spreads, debit spreads, pretty much exclusively dollar cost average into our favorite instruments. This trade, this is a whole nother strategy. I'm giving you a little sneak peek of what 2025 is looking like because I do trade this trade almost every single week. I like this trade. Again, it's pretty easy to manage, right? But I like this trade a lot more in a positive drift environment. I'm not as bullish as I was back in October, November. Okay, but you can see how easy this trade is to flip into a potential. Again, I'm still got risk on the trade, right? 460 originally, and I turned that into a $2.60 risk. But what do? I cut my loss down and potentially give myself a profit trap of maybe a 3-to-1. And I'm not really looking to close it out 3-to-1, but I would say if I get my 460 to 260 and I can close this thing for back up towards like 360 credit, maybe $4.60 credit, I'll take that trade, right? So it's just a way to, get in. If price goes higher, easy win. If price goes lower, you flip it into a butterfly and want to see if the market's going to grind for the week and finish out flat. You get a chance, and also it's defined risk, and you can mitigate a lot of that. So you're not in the hook for anything. It's a spread. It's defined risk. You're not looking at, am I going to get assigned because of this 592 or assigned to the 608? Nope. You're not assigned. It's defined risk. Okay. All right. Anyway, so that was a fun segment. But Nathan, to answer your question, of course, you can always take debit spreads. And for day one of Waterfall, I've talked about that. So I would, like I said, just go back and watch like any of the first 1, 2, 3 master classes. And I was very explicit about you can do this. I'm taking a credit spread and a debit spread. Here's why. The last 3-4 sessions, I've only taken credit spreads because if we had a dip, I want the hedge. I want to own the SPY, But we haven't had dips and we just keep making winners, and that's fine too. Debit spreads are winning too. Okay. All right. Anywho, where are we at for the day? Look, it's Friday, man. I'm exhausted. I'm ready to be done. Does anybody have trades running until closing bell? Let me see if I have any 0 DT that I forgot to manage today. Just for fun. I don't think I did. I might have had some hedges on today, but let's find out. DTE for today. NVIDIA is going to be a loss. Mara is going to be a loss. Apple is going to get called away for, and here's a good example, okay? I just made on Apple $665 on 9 accounts. 665 times 9. Okay, that was my profit this week on Apple. So losing on NVIDIA, losing on MARA, no big deal. Chewy has what? December 13th, $28 protective put. That's going to expire worthless. That's fine. I'll eat the $56. I'm still up to $1,700. My Chewy positions are up almost 15 grand this year. Okay, good. What else? Hedge, December 13th. What do I have? Long puts at 60.25. Okay, those were hedges I put on like a month ago. All right, I should, whatever, I'm stupid. I should have put those out past, I probably would have paid more for it, but I should have put those out past, what? Past the Fed, probably to the end of the year. So these are 0 DTs, so I'm going to lose 395 times 1, 2, 3, 4, 5, 6. So that sucks. 395 times 6, I'm losing 2370 on that position. It's fine, it's a hedge, right? Against the portfolio, it's a fraction of 1%. 395 times 6 divided by 2617. Oops. Dang it. 395 times 6 divided by 216. 2616. 2616964. There. I'm trying to think, just trying to see what my risk is. Divided by 395 times 6. This is why it's Friday and it's time to go. 2370. 2370 divided by 2616927. There. What? Shouldn't this be a tiny little number? Why is my math fuzzy? All right. I'm losing my mind here. $2,300 out of my entire portfolio, it should be less than 1%. I don't know why it's showing 9 point something. Whatever. It's going to be a loss on the hedge. Next up, I've got a bunch of 7 days expirations. These are looking good for Google out to next week. Baidu, I have some shares. I have some protective puts. I've got some covered calls out to January. That's fine. GLD out a long ways. That's fine. Netflix, anything here? A bunch of 111s out to December 20th. That will be income. Okay, fine. That's up $1,000. Tesla, I closed out 2 winners this week on Tesla. More to come next week. That's a ratio spread, 113 or 130 by 115. That should be up 33 grand. Some profits rolling in on December and January for Tesla. Amazon, all options. Amazon is up 11.7 this year with all options. I only have like personal ownership in Amazon. That's doing really well, but just all options, but aggressive. PayPal next Friday. Can we stay above 87.50? If so, PayPal will be up some net profit. That'll be good. Coca-Cola repairing to 65. Microsoft up a few bucks. Never took a single share this year in the portfolio. All right. Anyway, I'll move on. Just want to see if anything at the final 15 minutes. And all right, can somebody tell me what 395 times 6? So 2370 divided by $2.6 million. Right? This should be a tiny number. So is it because it's like 0.0009? It's like less than 1/10 of 1%. Is that why? Let me try this instead. 0.01 times 26. And I'm sorry if my brain is like not firing on a normal cylinder right now. Okay. So yeah, okay. I get it. 1% of my account is $26,000. I'm risking $2,300. So it's a very, very, very small fraction of 1%. So I guess the calculator's right. I'm just thinking it's a tiny number. I just thought I'd see a lot of zeros, right? 0.00009 or whatever. Fraction 1%. Got it. How are you trading Microsoft? Yes, it's all right. Microsoft options. That's it. Microsoft, I'm trading it with a combination of bull call spreads, credit spreads, ratio spreads. That's it. So it's a bunch of trades in here on this rip. It was a bunch of trades down here when we hit support. I did a bunch of like 111s for income. So that was all. I mean, what I in hindsight, it should have been this. The second bounce in the 200, buy some Microsoft. The bounce over here, buy some Microsoft. It wouldn't be like buying 100 shares. It would have been like, put in $1,000. Okay, bounce it again, put in $1,000, and then do some option income trading. But instead, I just did all option income trading. It's fine. Could have been better, that's for sure. Google, same type of thing. A lot of option trades on Google this year. This little 2 to 3 day rip, it just put all of my positions in profit. So all these credit spreads here, all these debit spreads, all these ratio spreads, all paying out pretty nicely on Google and likely going all the way to expiration. So Google is up, $6,300 with another $3,600 in open positions. But a lot of options. And, look, it's a $190 stock. Microsoft is a $450 stock. Meta is a $600 stock. Netflix is a $920. It's like, I'm not owning those shares. That's stupid. If I'm going to own shares, I'd rather allocate to the SPY or the Qs and own an index that's way less volatile than, look, as great as Meta is, as great as Netflix is, we could also see 20, 30, 40, 50% corrections on those stocks. So that equivalent to the SPY might be like 3 to 5%. So if I'm owning anything, I'm owning index ETFs, and that's why I'm also invested in the equal weighted ETFs because they're a fraction of the price. RSP, QQQE, they're way cheaper. All right. There you go. If you're starting with 2,000, can you explain what the plan is? How much usually? Yep. Daniel, you can take trades. So you got to be comfortable with this, dude. You got to be comfortable risking about 50 to 55 bucks per trade. So if you got $2,000, we'll just say 55 per trade. How many trades could you take? 2,000. If you lost 55, you get 36 trades in the service before you're blown up. Okay, we are 100% win rates right now. I'm not bragging. I'm just saying like that's good, obviously. But if we take a loss, make sure it's defined risk. We'll get it back. But the service has been a knockout. So that's about what you're looking at for your side of things with that type of account size. Start small, trade small, build the process, work it up. Okay. All right. Okay, I see the lag coming in now with my calculations because I can't tell that it's 0.00001. I get it now. All right. Any other questions? I think I'm good. I don't think I can make it to closing bell today. All right. Overall, look, next week is going to be interesting. Fed is on Wednesday, core PCE on Friday. Looking at the Bloomberg calendar to see what's forecasted, I would assume we are forecasting, just like on Wednesday CPI, it's probably going to be some creative accounting that shows that it's right on point. They're going to forecast, what's year-over-year PCE? 2.3, core PCE 2.8. If they forecast it at 2.9, it probably prints 2.9. If they forecast at 2.7 or 6, I'd be interested to see if it does that. That again, so between the Fed next week and this PCE stuff, this could be what allows the market to catch a bit into the end of the year for these last, Christmas and New Year's trading weeks. But if the Fed is talking about pausing in 2025 and PCE comes in hotter, I think the markets are going to start to sniff that stuff out. They might not want to smash the market lower to end the year because everyone wants to end on a high note, but I would say Q1 could be potentially a little volatility event to prepare for. All right. Okay. So that's going to be a big week next week. All right. Any other stuff on my end? Tuesday. Got it. Okay, and Daniel, I finally got that link for you. I'll send it to you in Discord. I just got the link right now. Let me find your message here. Okay, you can click on that right there. That link that I posted in Discord is a private message from our thread. That should get you the recording. Okay, I think all you have to do is give an email and the recording pops up. Just so you know. Okay, Nathan, no more questions. I'm kidding. Let's see. I'm preparing for Monday. Yeah, Nate, we'll just talk about it on Monday, bro. Okay. And look, I'm like losing my professionalism. I'm calling people dudes and bros and mans. It's ready to be a day to cash in. Anyway, yes, we'll talk about it on Monday. I will just walk you through. This is what I'm trading. You want to go debit or credit side or debit spread, credit spread. This is what I would trade. So we'll talk about it on Monday. Yep. So we're still doing the class, 11:30. Still placing the trades. Still do our thing. All good. Okay. Cool. All right. So I will see everybody on Monday. Next week, there is a bit of a schedule change. No final hour on Tuesday. Morning sessions right now should be okay. But we are awaiting baby at any time. Hopefully we can get through next week through Friday. That'd be 37 weeks. Anything longer than that would be great. But just, if I make some changes to the schedule, It's because we got some real stuff happening in life. But otherwise, it's a doctor appointment on Tuesday. We'll try to get through the week, and but I would say in the next probably 2 weeks, 1 or 2 weeks, I will be having a child. Child number one, except for Benji. I guess that's number two with the fur baby and stuff. All right. If I can't get started by Monday, can I still take a play? Depends on price. Of course, man. Yeah, I mean, honestly, that strategy is so easy that it's like I can take that trade whenever I want. There's a reason I take it on Mondays. I tested it intentionally. I'm looking for pullback days. I'm looking for chop in the market. Historically, Mondays were the best days to give me the best value. And then I tested like 9:35 a.m. and 10 a.m. and 10:30 and 11. And so noon happened to be like the best time to take the trade. So over 11 years, if I took the trade every Monday at noon, I had the best results. Was it like dramatically higher? No, but it was enough to be like, this is the strategy. Okay. All right. Sounds good. Okay. I almost made it to closing bell. I'm cutting it off 8 minutes early. We're good. Happy Friday. Have a great weekend. I'm glad we had the masterclass for double ups. That was a lot of fun. That was necessary. I think everyone's on the same page. I hope they are. If not, they watch the recording. But it's like it should be easy to manage our risk, easy to manage these trades. And I'm looking, like I said, we're going for liquidity hunts and we're going for market maker moves. They're going to get hit, but it might be better for me just to stick to the indexes and the ETFs for now until we get in some earnings and better flows going into next week, or I'm sorry, next quarter. So if we get an active week next week, that's great, but probably mild through Christmas and New Year's with limited trading time. So just properly setting expectations there. Okay, go play some golf. Might be simulator golf. We just got hit with like 4 inches of snow today. Little cold. All right, everybody. Happy Friday. Have a good weekend. Peace out. Hey, by the way, Daniel, just for you and anyone else, I am doing a webinar tomorrow at noon on waterfall income. So if anyone wants to join my webinar, I think I have it in my Telegram. This will be the best place to find it. So if I throw my Telegram in here, anybody watching this recording or watching live, waterfall income, 12 p.m. webinar on Saturday. So join my Chris Pulver Trading Telegram. Okay, so you can join my Telegram, which is the same link I just posted, but in that you'll see the links going into my Telegram channel to join that Saturday session at noon. Okay, so if you want to attend live, I'll be live tomorrow at noon. You want to watch the recording? I've got it there. Daniel hit me up in Discord, so I sent him the message. I've got the recording available if you want it. I did a couple of webinars with Jack Carter this week, which is a lot of fun. Cool. All right. Peace out. Happy Friday. See everybody. Bye.